FICO credit scores, the most important three-digit number nobody has ever taught you about. They've existed for about 30 years, and they absolutely dominate US lending, with 90% of lenders using them. But that doesn't make them good. They're supposed to predict how likely you are to default on loans, but they don't even do that very well. And for consumers, they're a disaster, because banks, landlords, and utility companies are collecting and sending our data cross-country to the credit bureaus. Copies of your personal financial data are everywhere, and these guys have horrible data security records.
Good morning to you, Michael. And this is one of the largest data breaches in history. And half of all Americans potentially exposed their highly sensitive personal information.
So say hello to Steve, who will soon be impersonating your wife and spending your life savings on a jet ski that he's obviously too large to ride. Get over it, Steve. It's not happening. Security isn't the only problem, because you're not the customer of the credit bureau. You're the product. They don't even give a minor fraction of a shit about you. Here's an actual poster hung in every office in the 3 credit bureaus. Let's zoom in a little. No, a little more. Oh, here you are, right next to the quarks. Beyond that, credit reports are riddled with errors. 1 in 5 of us has an error on our credit report, and 1 in 20 has an error so severe it would result in us being denied for financing or being charged a higher rate. And getting them fixed is an absolute nightmare. The FCRA has tried to improve this, but with almost no success. The best way to fix inaccuracies on your credit report is still by mailing paper letters. Sure, you could try to use the credit bureau's online dispute systems, but then all of the information belongs to them, so they have all of the power. So you can say goodbye to all of the legal protections offered to you. I could rant about this for a long time. I will not. Suffice it to say, this is an industry in desperate need of disruption, and I'm happy to say that might be happening now thanks to blockchain. You've probably heard of blockchain. You know, that thing that makes the bitcoins work? What's that, like money in a computer? Computer money? But blockchain can be used for more than the bitcoins. It's a technology that allows us to create a secure, distributed record of information. Imagine all of your financial data as a single document. Instead of it existing in an Equifax data somewhere, it'll be spread out among multiple servers. Only it actually won't be. Only a record that said that it existed at this point in time, and this is what it looked like. That makes it super secure because the data itself isn't stored, only some data about it and the fact that it's associated with you. Only it's not you, it's some anonymized token representing you. And that information is spread out among multiple servers, so it's really difficult to fake. And while security is sweet and stuff, no one really cares about it. Equifax lost 140 million people's financial records, and there were virtually no consequences. Here are the problems that actually matter to people. First, we want accurate, up-to-date scores. FICO's accuracy is almost a joke, and since the companies reporting the data have almost no incentive to do it quickly, it's slow too. Second, it should be accessible to everybody. Right now, it takes over 6 months to go from 0 to credit score, so if you need a loan this month, you're pretty much out of luck. Third, it should actually predict risk. We all want a loan that reflects our financial picture. I know we're all wishful thinkers a bit, but if you're squatting in a house surviving off of dumpster pizza, you probably won't expect a low-interest loan. But it would be nice to be able to qualify for something. Finally, they should be transferable. I used to work in the US, but I live in Canada now, so my US credit score is useless. When you move to a new place, you shouldn't have to start over. In theory, blockchain can solve most of these problems, and there are 2 companies making this happen now. One is called Spring Labs and one is called Bloom. They have pretty different approaches to it, but the goal is the same: decentralized, globally available credit scoring. I'll start out by talking about Bloom because they're a little sexier. Bloom is trying to completely decentralize credit scores, so instead of FICO owning a big pot of them, everyone would own them themselves. You can actually sign up for Bloom already. Over 300,000 people have, and create your Bloom ID for free. Because your Bloom ID belongs to you, you have to pay to build it up yourself. So you send in your driver's license to Bloom. They verify that it's real, then store that record in the blockchain. Then they delete your driver's license photo itself, only storing a record that says, Yep, this driver's license existed at this time. You can do this with all kinds of data, building up your own credit profile, and Bloom will even create a credit score for you they're calling a Bloom score. But with Bloom, you're in control, and that's a huge problem. It's like letting a kid mark their own test in school. The teacher reads off the answers, and then the kid just sits there idly giving themselves check marks. Maybe an answer's a little off, so they switch out to the pencil and erase it to change it really quick. If credit scores aren't impartial, what's the point? I personally think that I'm great, and I want me to have all the money.
$1 million.
These issues aside, Bloom is pushing forward. You can already borrow money through Bloom, and several real lenders have signed on. So while I'm not sure that you can use your Bloom score yet, this is what the process might look like. You use Bloom to go to Wells Fargo to request a loan. They want to confirm your finances, so they ask for some credit information. You decide what they can access, so maybe you let them see your current income, bank balances, and Bloom credit score. They decide to give you a loan, so you revoke their access. They could only see a few high-level details about your finances for a fixed period of time. This brings us back to where credit scores are now, where you are the product of the credit bureaus. This system works because it's impartial. According to the FCRA, the credit bureaus can only report entirely accurate information. Not entirely positive, accurate. Here's a scenario that's possible with Bloom, as I understand it. So I pay my mortgage and utility bills every month on time. I enjoy living indoors and not freezing to death, so I kick 'em the odd maple syrup buck. My internet bill, on the other hand, I never pay on time. I don't like logging into their system, so I pay them every 3 months. Quarterly. Since I control my Bloom score, I would pay to add my mortgage history and my utility bills to my score. I would not pay to add my internet bills because they make me look bad. When I go to apply for loans, banks would think that I am the coolest guy, but little do they know. Decentralized credit. It sounds great, but the conflict of interest is huge. Bloom itself is actually a protocol, so big banks can build on top of it, but whether it'll catch on remains to be seen. Let's move on to talk about Spring Labs, another kind of blockchain credit scoring system. They call themselves an unbureau, which is... Instead of banks and utility companies just handing their data over to the big credit bureaus, Spring Labs will buy it and then resell it. Only they won't actually be buying the data itself, just descriptions of it, much like the example before. That data might be loan or utility repayment history, debt details, really anything deemed relevant to credit.
I'm addicted to eating rubber tires.
Yeah, I mean, maybe that too. Spring Labs has got the incentives right, and that's why I think they're going to win, but it's not perfect. It's like they saw a sinking ship, patched it up a bit so it floats, but it's still full of water. They still have a lot in common with regular credit bureaus, because first of all, they still control the credit data. Sure, it's distributed, and sure, it's just metadata, but they can control access to the system and the code the system runs on. So it's not truly decentralized. Second, they haven't exactly solved the reporting problem. Because as a lender, if someone is late on a payment, I'm going to report it immediately because it affects my bottom line. But if a loan is paid in full and the account is closed, I'm going to take my time because that no longer has any financial incentive for me. This problem exists today, and Spring Labs' system doesn't seem to solve it. So let's jump back to what we actually want from a credit score. Accessible to everyone and transferable. Blockchain promises to make credit scores portable, available, and secure. So if it catches on, these three things are almost certainties. But what about the other parts? Accurate, up-to-date scores. We got a problem. If the system is architected anything like today's credit system, accuracy and timeliness are... There's no technical reason why Spring Labs couldn't directly integrate with lenders to provide real-time updates, but will they? There's also no technical reason for why FICO is so bad today, and yet it is. There's definitely hope, but I'm not holding my breath for it. Actually predicts risk. Over the short term, who knows? Over the long term, there could be some problems. Real data isn't stored on the blockchain, only metadata and aggregate scores. So what happens if you find out that the software you used to create those aggregate scores had some kind of an issue? You need to retroactively go back to every single location where that data is stored and recompute it from raw data. Now, what if that raw data is gone? Maybe they'll get it right and store enough metadata to always recompute everything. Maybe the risk assessment algorithm will be amazing right out of the gates, but I doubt it. So I kind of clickbaited you into this video with the promise that FICO will die. And FICO's technology is dead. Ancient history. But when will they actually die for good? Not for a while, I'm afraid. Spring Labs and Bloom are still really early stage companies. Spring just closed their Series A few weeks ago. And for those of you not in startup land, that means they only just figured out how their company fits into this world. And now they're testing to see if anyone actually wants to buy in. It's like a kid who just made a picture for his mom. He thinks it's great, so now he's going to take it to her to see if she wants to put it on the fridge. Yeah, it's that early. FICO and the big bureaus, meanwhile, still own 90% of the loan market. They could very easily just snap up these two startups and make them go bye-bye, or incorporate them into their existing businesses. Maybe this is like a Kodak situation, where instead of investing in digital cameras, they decide to double down on film and eventually almost go broke. Or maybe it's more of a Google situation, where endless high-tech companies come out and they snap them up left and right in order to ensure continued growth. My personal bet is Kodak, but what's yours? Do you think blockchain companies will replace FICO? Or do you think FICO will give them the sleeper hold? Let me know in the comments down below, and if you enjoyed the video, please don't forget to leave a like. Thanks for watching.